All right, so I thought I'd do another follow-up video on the Bitcoin. Why is it important to do a follow-up? Because we're working on pre-calculated swing days, trade hours, trade days, and pricing. So if you enter a trade, if you know the swing days, the future swing days, the future trade hours, you are better positioned to actually follow or add on to your position. This is Bitcoin just from yesterday. If you haven't watched yesterday's case study videos on Bitcoin, take a look. This is just a follow through. Now here, as you can see, I've got a bunch of vertical lines. These are trade hours. And then you might think to yourself, well, there's quite a bit there, right? Yes, there are quite a bit. So what are we going to do? Well, unless a time matches a price, we're not going to do anything anyway. So if we want to get into the market, we want to do it according to our personal technical analysis and money management approach. If you had done that, or if you learned technical analysis from me, after the impulse, your 37.5 at a trading hour was your entry. Okay, so this is Tuesday today. This is closing, all right, Monday, right? So this is Monday, this is Tuesday. So 37.5. So if you opened up today, so this was yesterday. Remember, we did the trade yesterday here. Why? Because we want to follow it up into the next swing day, which I said was Wednesday, right? And we had swing days from last week. So we want to just follow through, okay, and push it up. So we already took profit on the trade up here, okay? And you can also watch yesterday's videos for that. And the entry ABC pullback into 37.5 at a trading hour, this was it, or in Asia, this was it. Okay, because the market pulled back. Remember, want to push to the upside according to our technical analysis. Now we're here. Now, as you know, there are a bunch of hours here. So if the market is up here, should we be selling? Well, look, if our bias is to the upside and if we bought low to go up, we don't want to be selling here because it's not a trading day either. All right, so on this trading day, want to follow through and push to the upside. Now, two things can happen here. The market at trading hours can sell off. All right, they can say, you know what, we're not going up. We've decided against it. We're going to sell off. Fine. The market, we already took profit. The stop loss is above entry, so we're not really worried. We're not going to have a loss. In fact, we'll still close with a profit. But I'm looking at the market today, and also if you take a look at the members area for Tuesday, you will see that we've got a disruptive move and then coming into 10 past 9 my time, UCT +3, that is. If it pushes in one direction, do not stand in its way. It can push to 11:40, 12:20, 12:50, which is this zone. Now this is the time, all right, you can see 10 past 9 is there, isn't it? Let me just do this. 10 past 9 is 10 past 8 on the platform, which is there. All right, so the market is still here. And I did say from 2:30 to 3:45, this is 2:30 is 1:30 on the platform. So I've got that time period, 2:30 to 3:45 my time, which is 1:30 to 2:45, which is here. The market's done a push. And this is 4:45, which we've got as 5:45 in the members area. And that's your 4:45. So the market is pushing, okay? And then we don't want to stand in its way as it pushes into there. And these are the hours which are a little critical because now I've made a comment there. Let me, in fact, show you the comment so you can have a better idea. Okay, so this is what I wrote for Tuesday, okay? Remember, I posted this last month, okay, at the end of December. So what we want to see is the market pushing into 11:40, 12:20 to 12:50, which is this zone here. All right, this zone. And then what do we want to see? Then still to 2 o'clock and to 3:40. So we still might go into 2 o'clock to 3:40, which is going to be 1 o'clock on the platform. Okay, 1 o'clock. is going to be on the platform somewhere there. Okay, so in fact what I can do is do this. From there I can push into 1 o'clock to 2:40 on the platform. This is 2:40. Yes, so I just need to put a 1 o'clock here, and this is 1 o'clock. So you can see there are a bunch of hours here. So this zone is tricky all the way into New York. So two things we can do here. I can say to myself, well, there's a bit of a gap here. New York can shove it down to buy again. Okay, so I can either say to myself, you know what, let me just get out. I've already taken 1200 off the table. I'll take another 1200 and call it a 2-day of trading and just leave it at that. Or I can say to myself, you know what, I'm expecting the market to push up. I already took 1200 off the table, so I'll just leave it and let it run, because even if things go pear-shaped, okay, I won't lose any money. All right, the only thing I can lose is the current profit right here. Okay, now because if you also take a look, if you learn timing from me, you can also take a look at your timing notes. Okay, that the market is all flowing into like 7:20 my time. Okay, it's like the change in the market rhythm you know, may not happen. So this 11:40, okay, 12:50 is important, which is 10:40 and 11:40 here. All right, 10:40, which is this one, and 11:40, which is this one. Okay, so this zone is important. If it breaks out, we're just going to let it run. Okay, and if they decide to sell off, we'll get out. You know, if the market, I know I've got the stop loss above here anyway. So what I don't want to be doing though is I don't want to be going below cause for the breakout. Let me turn this into a 1 hour chart. Okay, so I don't want to be going below this. All right, as you can see here as well, the bars have closed up nicely, so there are buyers, but we don't want to be going below here. All right, with that wick. So our stop loss is pretty much okay here, no big deal. I'll turn that back into a 15-minute chart, push us to the front, reset that. So we're all honky-dory, okay? We don't want to be going below this zone. So if the market does come back, fill in some gap and push up again, great. If we get stopped out, we're going to be like no loss at all. We'll just keep yesterday's profit in our pocket. But if the market goes in our direction, because this push is implying that it may go into Wednesday, which is the trading day, then we can just let it run, and our anticipated target is all the way up there. Okay, so following the trade, if you know trading days and hours from before, way in advance, then obviously you're better prepared for the things that are going to come. Also in the trading hours as well, you are just better prepared for when something might happen. So you might say also, but why did you exit here yesterday and not at the trading hour? Because we're using time and price. We're not just using time, we're using time and price, and we want to have some common sense while we're doing it, right? If the market sold from here before, you know, I don't want to be pushing my luck if I already got here. Remember, the first trade is covering or giving me like 1 to 2. In this case, yesterday it was 1 to 3. All right, so 1 to 3 we already took off the market with just one trade. And the reason we could do that, because normally, what do I do normally? I open up 2 positions, one covers the stop, 1 goes to at least 1 to 3. But if I know the hours, and if I got a price target, I could say, well, so I got hours ahead of me plus target ahead of me. Let's at least get to the target or the hour, then I can get out. So I can get out with a higher profit. Watch the case study videos yesterday. They'll help. So here now, I'll have to sit tight and just, check out what happens at the trading hours. We are going to have a volatile day today as well. In fact, this 10:45 is a little tricky, okay? And what comes after is 11:40, which is going to be here. So this zone, it could like come down to go up. If it does come down to go up, it's not a problem. Then all I have to do is to check where we're going to be at 3:40 and 4:30, and that's it. Absolutely it. So if I know the hours already, then all I have to do is just match it to the hours and price. Also, if you're in New York, you'll get these hours, like if you're trading the New York session, you'll get these hours in advance. And if you're just trading that time period, you'll already have your setup, because you'll be looking for 3:40 my time, which is UTC plus 3, 4:30 my time, and what did I say? I said if you have direction, okay, if you have direction, 3:40, 4:30. If it moves from here, it should keep going to the target, which is 8:35 to 10 o'clock. It could include closing as well. All right. So once you have direction, you know where you're going. So knowing the hours in advance, obviously, a big help in your trading. Okay. Have a good one. If you have any queries, questions, shoot them through in the members area. I'm happy to help there as well.